Good morning, everyone. Hope everyone had a happy holiday with friends and family and assorted strangers. And sorry I was late. We got to chatting and I just sort of lost track of the time. That said, let me get right into where we're at. And as you see, where we're at is 69.35. With 69.50 round number, not that far away. However, might be a battle to get there. However, with the kind of animal spirit Santa Claus rally that I've been talking about and lots of people have been talking about for months, October, November, 67, 7,000 target has been kind of the obvious one. Suddenly, I'm sure there's people jumping on board that train. Calls are relatively cheap with a VIX at 14-ish. VIX doesn't just mean puts are cheap, it means calls are cheap too. And actually, if you look at put call skew, puts are expensive relative to calls. And so that's an interesting dynamic that's going on. Anyway, quick word, a sad story, cautionary tale about the IC whale that many of you see me mention regularly. You see me posting charts with the whale's positions on them. And he took a hit again on Wednesday, about 100,000 contracts. How many people of his subscribers, he has roughly 1,000 subscribers, went broke versus how many still have assets versus how many are going to stay versus how many are going to go versus what he's going to do to tweak his model is one of those yet to be determined. And like I said, I feel bad for his subscribers. I'm sure it doesn't feel good for him either. But this highlighted the flaws to the strategy many times. I've mentioned ways to improve it, and that is what it is. And I've been vocal on social media, I've written posts about it. So anyway, that's water under the bridge. I just kind of wanted to get that out of the way. And yeah, just one more piece of that. A lot of the people who, not a lot, a number of people who are his subscribers are people who sort of cut their teeth with me in the SPX Iron Condor game in 2017, 2018, when there was 3 times a week. A lot of us, me included, did mostly weeklies and threw in some Mondays and Wednesdays, and we didn't have the tools we have now, but we managed to do pretty well. A lot of people some people from that same cohort went on to start services. But a lot of them went to try different services, so quote unquote signal services where, people are given trades, whatever. And so through the years, a lot of them have filtered into different services and some filtered into his. And so I get texts over the years. Hey, what do you think of this trade? Oh, I found this great guru. You should check him out, whatever it is. And so, yeah, I get texts from those people, more than one. And they ask me what I think, and I let them know. So anyway, now that we got that out of the way, let's get on to where we are. Now, like I said, we're right at.
Go ahead and share your screen, Doc, if you want.
Oh, I have not shared my screen. Okay, thank you, because I've been sharing my screen and pointing to it. Thank you, Richard. Let's do a take 2 on that. Like I said, we're right at this 69.35 level. Just happens to be where I have the word stall written. And I'll go back to the options depth platform and show you what gives me that idea. And so here's where we are. We have a tight range today. Expected move is around 20-ish. When I looked at around 4:30 a.m. So from here, expected move puts us down near 15 at the bottom, puts us near 55 at the top. Okay, well, it was a little lower before, puts us up here at the top. And we, in theory, should shop around this range. Let me switch gears. So this is a note that my subscribers get, and there's a free portion, a paid portion. So yeah, this was we were roughly here overnight, basically unchanged. Okay, yeah. So I went down this little rabbit hole for a second. I decided there's really not much of it there now that I look at it. So the expected move for this week, just using implied volatility, even of the 9-day VIX, was roughly 130 points, using a 3.5-day week, not a 5-day week. And we've only realized about 50 to 70 points this week, depending on how you look at it, which, although it feels like a lot, apparently it isn't. So there's more room there, so to speak. So anyway, high liquidity can turn any 20-point drift into a 50-point, to move the keys kind of move. So that's, kind of the takeaway there. So the VIX 9-day, and so VIX comes in different flavors, different lengths. And I like looking at the VIX 9-day for short-term trading. That tells me what's priced in for the next week-ish. And the VIX 9-day is about 0.4%. And so, and the 20 points is even less than that. So is the VIX 9-day and the VIX at 14 overpriced? I don't know. These are just kind of little things that make you go, Worth noting, the JP Morgan collar strike, and we're not going to do a whole show on JP Morgan collar, although we could. Maybe I'll do a YouTube video on it. There's lots of content all out there about it. This is no big secret. And let's just use that as a good segue into this. This is Option Platform, and yes, I have a discount link, and no, I didn't put it in because I'm not great at this admin stuff. But here it is, looming large. 50,000 contracts at 7,000, a mere 1.1% away. Actually, where we are now, almost 1% away, give or take. So 1% in a week within the expected move. Holy moly. Holy moly, right here, 7,000. Who would have thunk, right? And so what happens is, yes, it's hard to get through it. Now we have to get through 6980. We had to get through some of these levels here, but that becomes sticky. I talk about this all the time. I'll show it later on a bar chart. As we move up toward these levels, let's pretend this is here in isolation, they sell, but as we move down, then they have to buy again to neutralize, to make their deltas flat. If I'm a market maker and I'm long these calls, I don't want to be long. I don't want to take directional risk. So as we go up, I have more risk. Let's say it goes down. So I sell futures to hedge it, but then as we move away from it, oh shit, now I'm long too many futures, so I have to buy it back. And you get this mean reverting chop, stairway dance up toward these levels. Whether it's intraday, where we see it quite often at the end of the day, or starting around 3 o'clock, or on a larger time frame, you guys see it not quite as obviously, but when there's something this big, it becomes really obvious. Now, yes, we have to get through 69, 50, and 70. There's a lot of stuff to fight through, but there's a path. There's a path. And so, and I did something in my Discord. I'll show it a little later. Kind of looking at the possible path up there. So that little rabbit hole segue came from this little note in my daily plan. Okay, here's the IC well thing. Respect the holiday tape. Okay. No high impact events today, nothing really going on. The only headline I thought that was, I said, oh, that's kind of cool. Wall Street Journal. Tariffs on Chinese semiconductors confirmed, but held for 0 for 18 months. So that means there's no tariffs on semiconductors or whatever they're freezing it at. And what do you know it? NVIDIA, that was, of course, down, was left for, you know, I don't know about left for dead, but was pulled back significantly, is suddenly back at 190, challenging its all-time high. Who would have thought, right? And so NVIDIA is back up near 190. Okay, so expected move bottom when I took it in the morning was the 9,000 area, 6,900, 6,910-ish really. The week-to-date range was around 6,850 to 6,920. And I always like to make fun of the gap fill gang. Or if anybody wants to come on the stage that's down here from the Discord, just let me know. I always like to make fun of the gap fill gang. And so maybe we'll see a gap fill in. So when am I talking about the gap fill? Here's what I'm talking about. We gapped up last week, Thursday to Friday, from 68.36. Remember, we were in the toilet and we kind of finally made it new here. Do you usually talk about SPX versus ES? I usually use SPX levels. However, we also have somebody that's usually on that kind of translate into ES. I also have it in ES version, so I could kind of do that or go back and forth. I don't know. Okay, and I'll talk about that. That's an easy one for me to talk about. That's an easy one for me to talk about. The options, that platform, and how I leverage it. Let me get back to the gap fill. So the gap fill gang is still has their eyes on this gap 30 to 57. And do we fill it before next year, JP Morgan collar in the sky? I don't think so. That's possible. Does that mean that I'm going to sell puts at 68.50? Hell no. What it does, and then so now we go to option, back to option depth, not the heat map, to the depth view, which I like. Now we kind of look at where the bodies are buried, so to speak, where the landmines are. And we have something at 69, 68.55. Nothing much in between. So should we lose 6,900 sometime last week? Have your first target area, call it round number-ish, 68.50. Then we have 68.35. Remember that gap fill? Looks like somebody bought puts at that gap fill a week ago and they're still sitting here. I don't know if they did or not, but it's just a coincidence that there's 21,000 puts over there at that gap fill level. And so somebody's a believer. And there was something else. I guess and then there was one other level I mentioned in the server, I think 68.10 maybe. I forget. But so those are the main levels into there. And then once we get into the new year, it's a whole different story. And I'll be writing something up for that, you know, over the weekend or whatever. And so that's where we are. Okay. Let me get to the dashboard. I'll try to circle back around and get everything else. So here's 0 DTE position numbers. These are the options that the market makers have in their hands right now that they have to hedge today. Have to hedge them out today, they expire today, or they're traded today. So they have to deal with them. And so we can clearly see 69.40 market makers long gamma, almost 4,000 contracts. That's big enough to matter. And so we get up to here and we stall. Market makers sell as we come up, but buy as we come back. And we have this little 30, 35, 40 thing. That's where we got the 35 from. So you make it up to here and you stall and you get trapped in this little zone, this little 10-point zone. Below 30, you have another little zone between 69.30 and 69.15 with a nice convenient little attractant right here at 25 round number, which happened to be the overnight low-ish. So, okay. So we're in this kind of narrow fishbone pattern. My former TA mentor used to call it a frog in a blender pattern. Red, green, red, green, red, green. But we don't want to talk about frogs like that, so we'll leave it blue. Now, below 69.15, we kind of have a little bit of a change of character. Some of the positive gamma locally today starts to lose its, diminish, lose its supportive nature. We're not stuck in this. We're kind of in a void, so to speak, and there's really not much other than a little bit at 6,900 round number, a little bit, 68.90, and then a wide open zone all the way down to 68.60. Not that we're going to get there, but it's there. Okay. I'll use this as a good segue to talk about this for Paulo or whatever, and also to help instruct people for another way to look at this. So let's look at the market maker positioning using the heat map. So this is market maker's gamma, not position number. So if you do the math, how much of a hedging response they need, the positions tell me where they are. The gamma tells me how much for today. And let's zoom in a little bit. And what we see, and so blue is that positive gamma market makers, long options. And so we see a lot of blue all the way up here. So what we see on the daily and what we see, say, multiple time frame, if you're a TA trader, I would think you probably learned how to look at multiple time frames, daily, weekly, monthly, or 15-minute, 65-minute, or 60-minute, daily and weekly. However you looked at multiple time frames, you look for confluence, you look for stuff to overlap. We have a lot of overlapping in the 0 DT and in other days, reinforcing that it's going to be hard to get up here. Does that mean impossible? No, it means hard. In here, in this zone, it's basically white to red. Red means kind of magnetic. Market makers have to hedge in that direction. So if we break 69.20 down here, 69.10, which was where we saw that bar to the left, is kind of like a target. And below here, 69.80 would be the, oh shit, who would have thought target down there? And so, the heat map I look at to sort of reinforce what I'm seeing on the 0 DTE, and or if I'm taking a longer term trade, like for me, long term is like Monday is a long term, though. Monday is long-ish term, but next Friday is starting to be long term. I have some stuff into January and even into February, yeah, me. So that's long term. I'm going to look at this. And that's how, I use the heat map. So blue is positive gamma stall. White is kind of anything can happen. Red is sort of attractant. So below this 69.20 area, we could kind of fall into this. So the risk is to the downside, kind of, sort of. That should we lose some of these levels, the path downward is easier than the path upward, just based on the data. That said, this is sticky. So the flip side of that, the flip side of that is as we go up, like we are now, they sell, but as we go down, they start to buy. You have some call buyers jump in at 69.50, round number, why not? Or 60, somewhere up in here, and we could end up getting stuck here. On the other hand, see, I got two of them. On the other hand, if we kind of stall out here and people start jumping in, buying these puts down at 69.10, 6,900 round number, they're cheap. We could get pulled back there. And that doesn't mean we can't go in both directions. We certainly can. So that's sort of the roadmap for the day.
I'll just add quickly something you did on your Discord in your trades. Keep in mind that Doc shares his trades on the Discord. You had a fly, just a standard 10 wide fly at that 69.10.
Correct.
So just to further the point you were trying to make for Paulo about how he uses options depth, that 69.10 negative strike, center a fly there, 10 wide, and maybe you can make a little money today doing that.
Okay, and I'm glad you pointed out. So for educational purposes, I'm putting in one trade, whatever, one contract, just to kind of, and you see, I did some here. I don't know if you can see, I did some here on the 24th. I pretty much always do a one lot of some kind. So here I have one with 10. I don't know if you can see it, with 10 as the mid. I also have a call fly in with, I think, 40 or 50 as the mid, somewhere in there, looking to leverage those areas. They're cheap. If I like them, I'll add more or whatever. And so, yeah.
Right. You do have, if you'll notice on that last one, you do have possible in all caps there, a possible starter put fly.
Right, possible.
But I think what Doc is showing us right now, just to give you an idea of what you would see.
Right. I did this at 6:30 a.m. So, there's a lot, there's football left to be played. But thanks for pointing that out. While we're at it, let's point out something else. So, and this is from a friend of mine. He's on Twitter. I just like his stuff, so I put it up there. It's nice and easy to read. Here's some diagonals. I was looking at double diagonals. We've been talking about that. Another buddy, Tom Lee, not Tom Lee the drummer, not Tom Lee the fun strap guy, but there's a third Tom Lee likes to do these. And so we were looking at some diagonals. But I just want to show you what I was messing around with. So here I was messing around with this into next week, that long-term trades, and what I was showing you before. So here's the same gamma positioning for the week ahead, through Friday, through Happy New Year. So you have 69.50 and 69.75, two target areas. Here's the path from 25 where we are up the ladder to 50. So when we look at the whole week, some of the longs out there in time kind of overshadow the short-term stuff that's sold. So there, could be a path to 50 is not crazy. Above 50, we have this kind of zone, 50 to 75-ish, 75, 80. I think this was the 80. We think we saw 69, 80 on the depth view area. That's kind of got to chew through this to get to here. And if we get to here, 69, 75, 80, I think we could take a victory lap even if we don't get to 7,000. And here's the big JP Morgan 7,000. And, you're going to have all these countervailing flows, etc. Now, remember, this is gamma, not position size. And gamma is dependent on how close we are to a level and how close we are in days to expiration. Now, this is almost a week away. Imagine how big these bars are going to be when they're a day away, 2 days away. So that's going to grow, and it becomes kind of like, just kind of gets sucked into it. And unlike the IC whale, who had 5 wide iron condors, 100,000 of them, but 5 wide is kind of easy to go through. This is a naked, sold call, just one. Nothing on top to hedge against, so to speak. This is pure raw deltas that have to be hedged. Not 5 wide, which the deltas end up kind of, balancing out, so to speak. Not really, but kind of. So that's the path. On the other hand, OTHO, below 69.25, throughout the chain, 6,900 is not, is not unreasonable. And who would think it is 30 points away? Below 6,900. There's a path towards 69.50, and there's our gap fill gang. There's our gap fill gang at 68.35. Do we hit that? I'm not saying we do or we don't. I'm just saying this is what the roadmap says. So I did that this morning at 5:37 a.m. And here's the same thing, kind of. This one, and then this is without Friday, without today, and then the roadmap is basically the same. If we take today out, and here's today, the same thing we saw, but I draw this out so you can kind of see where the zones are. I like doing it. I accidentally discovered that you could do this with whatever it is, with Windows, Shift S, whatever it's called, the clipping tool, whatever it is. And once I found out that I can make these boxes, that's cool. So I do that. Let's get back to the note. And so there's that discount code. So if you want to go to options depth, you want to subscribe, discount code DOC, DOC, small letters, and you get, I think, 15%. And here's the roadmap where I kind of, the detailed, pretty much what I spoke about right now. Here's the trading view strings. That's these guys. Good segue for me to answer the question. That was posed by, who was it? By this viewer about E-mini. And so, did I put the E-mini in? I think I did. Oh, man, okay. Yeah, the order fails me. Here we are. Here we are. And so here's the levels using E-mini, and the same hedging response is required of market makers when SPX, when the index gets to Here, they're at the wall. You're welcome. You're very welcome. When the index gets to this wall on SPX, they have to sell or buy, whatever they have to do, and E-mini is coming along for the ride. E-mini is not steering the bus. SPX is steering the bus. E-mini is a training wheel. I know E-mini folks like to really look at the number of contracts there and the depth of book and all that. And yes, it's important. And yes, it has an effect. But let's not be mistaken. SPX is what's driving the bus. And so subscribers get this E-mini string, and a lot of them, I know how you E-mini folks are. You're scalpers, nothing wrong with that. I'm a recovering scalper myself, and I do a little bit, although they say one is too many and 1,000 never enough. I do a little scalping, and what folks tend to do. Let me see if I have it over here somewhere. No, I don't have it here. Okay, let's just pretend you like to use TWAP, time weighted average price. So whatever you like to use, TWAP, or you like to use TPO, or whatever you use, or whatever you use, this in conjunction with that, let's say your system tells you we're going to here, go long here, go short there, share size this way or that way. This gives an added bit of information. And once we get there, what happens? Well, how likely is it to get there given these other factors? And that's how a lot of folks will use the SPX gamma in their scalping. And I would say probably half of the gamma scalping world, so to speak, uses E-mini, maybe more. It's very common for people to use this for E-mini. So yeah, maybe we can do a YouTube live stream on that too. I'm going to gear up the YouTube stuff for next year. That's kind of it, and I'm also going to write a little New Year's resolution thing, or be a post, not New, a look back and a look ahead for the new year, both a personal inventory as well as trading plan, kind of, sort of, as well as what I'd like to do content wise. And if people have suggestions, whatever, please send them in. And so, but that's one of the things I'd like to do. Also, some coaching. A lot of people have asked me about coaching or mentorship. I have to figure out how I'm going to structure that, just time-wise and personality size fit. Coaching is a relationship, so have to see how that's going to play out. I'm a retired psychologist, so there's going to be a dose of that in any coaching with me. It's not going to be X's and O's. Here's the content. Here's the syllabus. Go learn it. So I'm going to have to kind of figure that out. Although I do have a syllabus. And there's my BFF. Like, share, subscribe. That's what I'm talking about.
For sure. If you have friends who are curious about, maybe they're curious about options depth, they can always come to these live streams and ask questions. So thanks to all the folks that ask questions to keep the conversation going. And just one quick shameless plug that you're running a promotion. If you're ready to go into the Discord, you'll get a month free with a quarterly subscription to Doc's Discord. You just go to WAP. You can search for Doc McGraw or Options Gelt. That'll get you to his WAP storefront, where you can sign up for the Discord community that includes the Substack.
Yeah, and the Discord is going to be full of my commentary. It's going to be full of, educational stuff that I've done over time, and whatever, non-discretionary institutional flow, whatever. Going to have resources, links, all kinds of stuff. Oh, big feature from the options depth. The wise owl here is able to, okay, so the Discord is part of the package. It's part of the package. I think we're at, I'm not sure what the sale we have now is, like $69.95 a month, whatever. The link should be in there.
Yeah, you're right. You're in the right ballpark, and that's with the quarterly subscription. With the new year starting, might be a good time to think about the quarterly subscription. You're running their promotion for 3 months. Get the extra month free, and yeah, you're right around $70 a month.
Yeah,
a couple credit spread a month will cover the cost of the subscription, and there's a wealth of information in there. There are some really talented traders, and the community in general very supportive of one another. And Selena's a great example of that. She's just one of those personalities that you love to have in the Discord community.
And the community, for me, the importance of having a trading community can't be overstated. Whether was when throughout my whole trading career, trading is a lonesome business. And so the answer to that question is around $70, a little less, 60 something. You get the Discord, and you get the TV strings, and you get the daily note, and you get all that stuff. And you get me yakking in your ear all day long, pretty much, and et cetera, et cetera. One of the things that can't be understated is the importance of this intraday flow. This is during the day, we meaning he takes the options depth data, options depth gets flow, every 10 minutes, bought from the CBOE, it's tagged. No guessing, not at the bid, at the ask, whatever it is. This is tagged. I'm keeping my ass out of bad trades. Been there, done that. I've gotten much better at it over the years, and we can talk about that. And there's lots of reasons for that. Some of them sort of psychological, emotional. Some of them just executional. That's a whole interesting rabbit hole, why we ignore knowing better. Why do we ignore knowing better? It was actually an interesting post by Druckenmuller, I think it was, this morning, last night. He was talking about a trade that he did in like the year 2000-ish. Whatever he did, and then he was down, and then he decided it was a good time to buy. He hired some like techie people, and decided that the internet was going to be a thing, bought a bunch of tech stocks, made like 30, 50%, sold them right at the top when he said, look at this, the PE ratio of the QQQ is over 50. This is crazy. Sold it, made his year. And then about a week or two later, it kept going up. And he said, maybe I should get back in. He knew he shouldn't. He knew he shouldn't get back in, got back in anywhere, and screwed his whole year up. Druckenmuller, Stanley Druckenmuller, the legend. And so he ignored knowing better. And that's a common human characteristic. And so I don't know if that's what happens, but that's the thing. And so we know the flows come in. So we know, for example, look what happened right here. I don't know if you could see this, but pre-market at 9 o'clock, somebody closed the 69.55 short calls that were there, opening the top a little bit, and some other somebodies added to the 69.10 10 puts, buy to open. Remember we talked about that potential weakness down there? So suddenly the landscape has shifted just in this time. And we get this intraday, so you can kind of see the sand dune shifting. When I was a young hippie, I was in Israel. I went backpacking to India, whatever. But the part of the story is I was in the Negev desert, kind of camping out, backpacking, whatever. And I would go wherever I would go, and the winds would come and the sand dunes would shift. And suddenly I have to find my way back to where we're camping, and the sand dunes had shifted. And so, the camp thing is where that big sand dune is, but no, it's not a big sand dune anymore. But there is a sand dune. You can kind of see it, but the sand dunes have shifted. This is the shifting sand dunes intraday. True story, true story. I almost got lost one day. We had a big windstorm. I go, where is he? I find my way back.
Where are you going to get commentary like that? The shifting damn
commentary like that.
You're not going to find it anywhere else, folks. Just real quick about Floel. I can. This guy is a machine. I can't believe how he just does this day after day. And
it's worth it for the entertainment value.
Watching flows.
I crack myself up all the time. Anyway, so that's that. It's 9:20, so I've kind of gone past the half hour I theoretically allocate myself. And so yeah, we'll talk about risk management, keeping your ass out of bag trades. Oh, apparently Tammy Rogers is a friend of Selena, so that's cool. Oh, good morning. So here we are. Good morning, Tammy. Anyway, I'm gonna get out of here. I'm gonna look at these diagonal trades, and I guess getting back to the main point, and I'm serious about this. This is not just like a bullshit disclaimer. I'm not putting these in necessarily to give you a signal or trade. Yeah, it's an idea. We spoke about it this morning, me and another subscriber, like a half an hour. What's this trade? How we construct it? Came up with 3 different variations. You might want to do it this way. You might want to do it this way. You might, depending what you think, how would you think about it? It's the old teach you to fish, not feed you a fish. And that's really the goal of this. Copying somebody else's trades, yeah, that's nice. But we all have different account sizes. We all have different risk tolerances. We all have different levels where we're going to say, oh, crap, close this out, or different greed levels where we say more, or good, I'm going to take the money and go home. And so all those factors go into a trade that you can't copy and paste. Good morning, everyone. Trying to observe alone. Glad you're here, Tammy. And so anyway, that's it. I got 8 minutes left, so got to get some trades in. I'm probably gonna. Let me see what we got on the docket here. So I already have some stuff in, I already have some crap in here for today that I did last week. I'm looking to probably add down here, if I can, 35 cents. There's nothing to do, but I have them in for 50 cents. If they fill it, I'll take it. If not, then too bad. That 69.10 area, you see here's the volume. You see there's interest at 69.10. So back in the days, in the Stone Age days, before we had options, depth, or gamma, we had volume, pre-market, and we had open interest. And when you see this kind of stuff coming in, even back in the Stone Age days, it's something that makes you go, So the biggest pre-market volume right here is 69.10. Next biggest is 69.55. Those are closing those shorts, remember? Those are buy to close. So here we just see volume. But with option depth, we know those aren't buyers. Those are people buying back short calls. Totally different story. Totally different story. Back in the days, in the Stone Age days, we didn't have that. So anyway, 90, let's just see what that looks like. Away from the round number, 55 cents, not terrible. I don't think there's going to be enough juice at 85 to be worthwhile. Whoops. Oh, we already have those crazy pre-market prices. You see at 9:20, whatever it is, the bid air stops and you get crazy numbers. So anyway, that's it. I got 5 minutes left. See you all. Trade safe. Have a happy weekend. And hope you had a happy holiday. Bye.
Thanks, Doc.